that give you the best and most practical, actionable insights. Radio 4 of the Zambia National Broadcasting Corporation. It is a good morning and welcome back to the Dalama Insights. I'm Leslie, and of course, today we're delving into a crucial topic, which is Zambia's first quarter 2024 economic outlook for investors. Now, to guide us through this exploration, we have our insightful Miss Mukonke Mukonke, CEO of Insight Partners Africa. Konke, it is a good morning and welcome once again to the show.
Thank you, Leslie. How have you been?
Very well, thank you. And how are you?
Good, thanks. Good morning, listeners, and welcome to the program this morning.
All right. Now, before we even delve into the outlook, why
Mm.
is understanding Zambia's economic situation important for investors?
Leslie, it's important for investors to understand the economy of the country because this is their decisions, their investment decisions are based on the performance of the economy. So, how you invest in your government bonds, particularly with a shift in in the issuance policy, how you buy your stocks, and all those decisions center around the economic performance of the country. And so it's very important for us to look at key indicators that are affecting the performance of the country. And if you look at the economic outlook for 2023, we see that there was actually globally, that is, there was actually a downward trend from a projected 6.3%. The global economy ended at around 3.1%. So it's very important to take a look at the performance in terms of Zambia. Despite the drop down in the global economic performance, Zambia recognized or experienced a growth in its economic performance to a growth of 4.3% from a projected 2.7%. So, despite the global economy not doing really well, Zambia's economic performance really did do well and ended at 4.3% in 2023. And this notably was as a result of, good performance in the ITC sectors, construction, as well as financial services. And towards the end of the year, the mining sector as well contributed pretty well to the economic performance of Zambia. So this information is very important for investors. We need to know how our economy is performing and also how the projected performance is expected to turn out so that this can form our investment decisions. Yes.
Now, what are the key indicators that investors should pay attention to in Zambia's first quarter 2024 economic outlook?
Thank you, Leslie. So I'll talk about three, and these are generally the ones that are normally spoken about. The first one is GDP. If you look at Zambia's performance in GDP, and I would love to actually thank the Ministry of Finance and the Bank of Zambia. Recently, they held a symposium where they discussed Zambia's performance in 2023 and also the outlook for 2024. And much of the insights gleaned from that symposium is what I'm sharing in on this program this morning. That symposium was very useful, and I really encourage the Ministry of Finance to continue having similar discussions even in the future. So if you look at this discussion, what was highlighted was that the GDP was actually performing really well for Zambia. From about 4%, we ended up at around 5.1% in terms of the increase in the GDP for Zambia. And so with everything that is happening in terms of revamping the economy, which we're going to look at or touch on this program, we expect that the GDP, which is the gross domestic produce, which is just like the overall, revenue that the country makes, we expect this to grow. And this is important. With the growth of the GDP, we expect the economy also to grow. And as a result, we expect businesses to start performing better. So the Minister of Finance projection is an increased GDP. Inflation, which is the next economic factor that you also need to have a look at. Inflation, we know, erodes our purchasing power, and Leslie, you might have observed the ever increasing inflation. If we look at the movement From in December last year, inflation stood at 13.1%, and by January, this had increased to 13.2%. So last year, we actually saw an increase in the inflation rate, which definitely is affecting all of us. We've seen an increase in the prices for goods and services. The coffee that I love to drink, Kasama coffee, I just went to a shop recently and discovered that it's actually gone up tremendously. And I'm actually considering alternatives to drinking the Kasama coffee. So we can see the impact in terms of inflation. In terms of the projection, the BOZ governor has projected an average inflation rate of 12.5% for 2024. If you notice, this is still beyond the target range. In the budget, the Minister of Finance always mentions the target range in terms of inflation. Zambia's target range is a range of 6 to 8%. Now, if you look at the projected average inflation for 2024, it's going to be around 12.5%. This is way up beyond the targeted inflation rate. And so it's interesting to see what monetary policies the BOZ is going to implement to try to bring us into alignment with this target. But the projected average inflation rate for 2024 is 12.5%. And for 2025, also projected is 9.9%, which is a reduction. So what I glean from this is that in the medium term, inflation rate is still going to continue increasing, but in the longer term, we're going to see it reducing. And as to why, we're going to look at this very soon. And then the last one is the exchange rate. Really interesting. The exchange rate in the last few days has caught me napping. Like I couldn't believe it. But then after looking at the monetary policies that the government through the Bank of Zambia has implemented, and a few other developments that we're going to touch on, you could actually understand why there's been this bullish performance in terms of the appreciation of the Zambian kwacha against major currencies. And so the exchange rate, at some point, we saw it going all the way up to 27% just recently. And then right now it's dropped down. We are trading, according to the BSO website, at about 24%. 24 kwacha to a dollar. So the exchange rate was about 27 kwacha to a dollar, and now it has dropped to about 24 kwacha to a dollar. This is really interesting, but generally we saw a depreciation of the Zambian kwacha against major currencies, and this is something to take note of as well. So these as well as the interest rate, by the way. Recently, the Bank of Zambia increased the monetary policy rate, which is the lending rate that banks use, to 12.5%, which is an increase of 150 basis points. So generally, these are the economic indicators that we are currently working with.
Now, when we look at the monetary and fiscal policies in place, how will they impact, the interest rates?
So it's really interesting, Leslie, to hear the Bank of Zambia talk about this. We obviously know that because of the increase in the MPR, the monetary policy lending rate, interest rates are expected to go up. And as a result, borrowing becomes expensive. Now, when borrowing is expensive, the expectation is businesses will not be able to borrow, and as a result, their businesses will be affected. Okay, so what is why do we have to take these drastic measures? So the Bank of Zambia governor explains that this has to be done in order for us to control the ever-increasing inflation rate. So to reduce the inflation rate, there's no other way other than to take these tight monetary measures, like increasing the MPR. And so it's given an example which is pretty interesting. If taking tight monetary measures is similar to a patient who wants to be healed. And if you want to get well, you may need an operation. It's painful, but in the long term, you're going to be relieved. And so that is the explanation that's been given. And also another interesting point that I gleaned from the minister's presentation, as well as the Bank of Zambia governor's presentation, is that the economy is affected by many factors, and I'll mention two. He mentioned four, but I'll mention two. He said there's the monetary part, government intervention through the central bank, and then there's also the private sector part. So these have to work in alignment. So if the private sector is not performing well, and we see that because of maybe less production in the mining sector, less manufacturing, as a result, our economy is weak and inflation is increasing. This is where central bank comes in and ensures that we are working within our targeted amounts in terms of inflation rate. And so these are some of the measures that the central bank takes in order to bring us into alignment, without which we might, result in hyperinflation. And it's interesting to hear the Bank of Zambia speak about this hyperinflation, resulting in, we've seen other countries, for example, Zim, our neighbors, whereby prices constantly change and we don't even know the price of any goods or service. So these are some of the monetary policies that the minister has implemented. We saw the statutory reserve being increased also by 900 basis points earlier this month. So the statutory reserve was also increased. This is also to help control inflation.
Now, the statutory reserve ratio, which was increased by 900 basis points or 9% earlier this month. What is a statutory reserve ratio and why is it important?
So the statutory reserve ratio is an amount, it's a proportion of deposits that the banks are required to hold in reserve and not lend or invest. So this was increased. Okay, what this means is the banks will not have as much money to lend to their clientele, and this results in a decrease in the money supply and also potentially slowing down the economic activity. Because funds are no longer available to lend out to businesses and to stimulate growth. But as already explained, these are measures that must be taken in the short term in order for us to benefit in the long term. So that is what the statutory reserve is.
And what is the impact of raising the statutory reserve ratio? How do you feel it in our economy?
So the most the one sign that one result of increasing the statutory reserve is increased interest rates. Okay, that's one sign, because with less money available for lending, banks will need to raise interest rates on their loans to compensate for that higher reserve requirement that they're required to keep. Um, so that is one result, and also it might pose liquidity challenges for the banks, especially if they do not have sufficient reserves to meet these higher requirements in terms of keeping money aside and not lending it out. So these are some of the results of increasing the statutory reserve. Yes.
Okay, now for investors,
Mm.
and mostly our listeners, so long as you are putting your money in a bond or a stock or real estate, you're basically an investor. So
Yes.
for investors, how might these assumptions impact investments in bonds, stocks, and real estate as well in the first quarter?
Thank you, Leslie. So, having learned all this, how does this affect my investment? I have invested in the bonds. So, stable inflation favors bond investors because you are assured of, the, the coupon rate that you are going to get. But also, if you look at the depreciation of the kwacha and also the interest rates, these also affect the coupon rates, especially under the new issuance method. Because if you look at an ever changing interest rate, it makes it really uncertain for investors to bid when it comes to bidding for the coupon rate that they want or they desire. And so it's really important to focus and look at the impact of the increase, especially in the interest rates. Now we've seen a reduction in the exchange rate. How is this going to affect your investments in maybe fixed deposit accounts and all of that. So it's really important for you to consider the impact of these changes on your investments. But certainly, a stable inflation is good for bond investors, um, as well as infrastructure driven growth in terms of investing in the stock market. Real estate is one investment that is rarely affected by inflation, because with an increase in inflation, we expect prices also for rental properties to go up. So real estate is a good investment if you want to protect yourself against poor economic performance. So these are some of the how you can apply some of the impacts in terms of these economic indicators. Mm.
I was looking at some of the returns as well on the coupon values.
Mm.
They were looking good though. But then when you consider inflation, I guess they're not that good.
For
So
which
that's
month
for the month of February.
you are looking at? For the month of February, so which particular tenure and what rate?
3 and 5 year tenures. The 5 year tenures were looking good at 20%,
Mm-hmm.
or yeah, between 20 and 24%,
Mm-hmm.
which to me sounds like a high return for a coupon value.
It is. And one way you can look at it is 20% is above our current inflation rate. Our inflation rate as of January stood at 13.2%. It's above. So the 20% on your 5-year bond is above the inflation rate, which is what you should be aiming for as an investor. Okay. Because if you deduct 20% minus 13.2, it still leaves you in the positive. So your real return is still positive. And ask yourself, what other investments can you invest in that will give you a similar return? So that's how you can also take a look at it. So bonds generally in our market in Zambia, for me, are a preferable investment option.
Well, Mukanki, that concludes our first quarter economic outlook. Thank you very much for coming through this morning.
Thank you, Leslie. I hope this was useful. It was pretty hard, but we are getting there. And hopefully, quarter two, we're going to share much more insights and also encourage the Minister of Finance, BOZ, to continue being transparent in issuing information such as this. It's very important for all of us. Thank you so much.
All right, and for all our listeners for the Dalama Insights radio show, even if it does sound a bit technical today, the more you understand these technical issues, the better it is when you're doing your investments and putting your money in all these different things we keep talking about. Thank you for listening in. This has been the Dalama Insights radio show. Until next week.